Hit me on my Cash App, check it in the morning. We did our homework so we can make your money work with Square, the tech company even rappers are backing.
Square is a global leader in the so-called e-commerce ecosystem that offers a wide product library with everything from payment terminals to digital services. For instance, they created the retail terminal shown to the right, which you've all probably seen in a restaurant or a store at one point or another. Currently, they specialize in point-of-sale software and services, but they're very heavily invested in the cryptocurrency space as well. They own a number of patents and IPs. And they've also created the wildly popular mobile payment service Cash App, which is the only peer-to-peer payment app with zero latency and with Bitcoin trading capabilities. They're led by widely respected Twitter founder Jack Dorsey, and they're headquartered in beautiful San Francisco, California.
Square takes part in the point of sales industry, an industry with a 10% annual expected growth rate. Simply, point of sale is the transaction between a merchant and customer when a product is bought or sold, something that goes on in every business. So basically, it's really important and something that will continue to grow as global GDP increases and people buy more things. It was worth $9.3 billion in 2019, and Square absolutely dominated the industry with a 52.4% market share. A lot of their grasp on the industry is a result of the broad range of products they offer for almost every step and type of transaction, essentially creating an ecosystem where companies can get everything they might need all from Square. They also hold complete control over crypto markets, something that we'll review later.
So we rank Square stock as a buy to hold with a 12 to 18 month target price of $369.45. And a major component that affected this valuation is the number of rising and emerging markets that Square is involved with, as they've proven themselves more than capable of capitalizing on new trends. One of these markets is peer-to-peer blockchain and cryptocurrency, which is a market that they currently have a firm grasp over via patents and copyright. And we believe that this grasp will become increasingly profitable for them as blockchain is pulled further and further into the public eye. Square's value is also heavily based on intangible assets that don't appear on the balance sheet, which is why we believe that they've been overlooked by most major analysts who fail to include these future revenue streams in their calculations, and thus don't notice Square's immense potential. Additionally, their numerous players are divided among 4 different fields, resulting in various branches like Square Crypto, Square Cash, and Square Terminal. And this diversity protects their revenue from ever dropping too drastically, as these industries are supplementary to one another and therefore will rarely fall at the same time. So currently, the major barrier to using cryptocurrency as payment is its volatility, as it's estimated that the price changes every 30 seconds on average. And with digital transactions, where a middleman is responsible for transferring payment from consumer to vendor, those fluctuations could cost businesses very heavily. Square's patent, however, could entirely remove this obstacle and ensure that the full value of the payment from the consumer is retained, which makes crypto payments accessible to businesses of all sizes. This accessibility aligns with Square's mission statement, which is to bring traditionally high-tech systems within the reach of small businesses. And they've also revolutionized the traditional notion of business expansion. For instead of pouring all their overhead into just one venture, they've invested in things like Cash App and blockchain that set them incredibly far ahead of competing firms.
Square's 52.4% market share is a direct representation over their grasp on the industry and their competitors. With advanced technology such as their patented crypto systems, Square sets itself apart, a direct result of their focus on research and development. They spent 19% of their annual revenue in 2019 on R&D, a stark difference from their competitors, such as Shopify's 11%. We categorize Square as a wide moat company, acquiring 19 companies and offering all the products a company might need, as shown here. Again, creating that immersive ecosystem we mentioned. Retail point of sales is specifically the most valuable sector, as shown in the bottom right. And these clients don't need to approach any other companies for services, making competitor specialized payment services less valuable, such as PayPal, and making Square that much more dominant. This lays the foundation for the low Porter's Forces rating shown in the upper right, as there's a low threat for new entrants, few substitutes, and large bargaining power, as no company can match Square's quality. While obviously not a draw for commercial clients, it should be noted that Square Cash App has been referenced in pop culture hundreds of times by over 200 artists. When the general public has a choice for payment systems, they're naturally going to be more inclined to use something that they're more familiar with after hearing their favorite rappers publicize using Cash App, an added benefit to Square.
So Square had a 2020 revenue of $9.5 billion and a quarter one EPS of 0.44. We concluded that the most reliable way to determine the health of their stock price was a multivariable approach, using both relative valuation and discounted cash flow analysis. So the relative valuation yielded an intrinsic value of $448.50 for Square stock, trading at a 5% deserved premium, whereas the DCF model gave an intrinsic value per share of 90.4, and the full charts are available in our report. So we averaged these two prices and factored in their pre-revenue assets, as well as the fact that our target price is intended to reflect 18 months, whereas the DCF model is projecting over 7 full years. And the resulting target price from that calculation was $369.45. So I just want to quickly go over Square's stock chart and clarify any potential red flags that may jump out. So they experienced two major peaks in 2017 and 2020, brought about by very positive earnings calls and a reactionary market, which you can see in the top right corner. Their largest drop, however, came in 2020 with the pandemic's onset. But you'll notice that Square's stock price rebounded fully by late April, which is almost 3 times faster than the market average. Even PayPal, their largest competitor, took almost 4 full months longer to recover, as you can see in the bottom right chart. And we believe that this recovery is due to the aforementioned revenue splitting, as Square is the only payments company that's effectively diversified its interests in a way that preserves its stock price.
So apart from good-looking stock charts, I'm here to assure you that Square really does make some money. Starting a small business is so easy now, and Square's lineup of products caters towards both corporate and smaller companies, giving them a consistent source for growth. Also, with the aforementioned prioritization of R&D, Square is always at the top of the industry in terms of what it can offer, including their crypto transactions. Square's diverse income allows more immunity to some of the regular market fluctuations and makes the revenue less volatile, as no individual market trend can control that year's income. Even with Square's advantages, however, the CEO of Square and Twitter, Jack Dorsey, his commitment is a risk with possible conflicts of interest in terms of time and also the partnership between the two companies. Square's vast product line also makes them susceptible to smaller, more specialized competitors, and Square will have to continue spending large sums on R&D just to make sure and maintain that their market share remains. In addition, Square's crypto patents and even direct investments in Bitcoin may turn out to be less valuable than expected, as the crypto markets are extremely volatile. During COVID-19 and shifting economies to e-commerce, Square has to deal with the shaky investor confidence in the industry as a whole, though Square is poised to continue exceeding expectations with such exceptional product lines.
So Square is led by CEO of Twitter, Jack Dorsey, who previously founded and currently leads Twitter, as we previously mentioned. Square's only been public for 5 years, with their IPO day being in 2015. But in that time alone, Mr. Dorsey has continually received one of the highest CEO approval ratings in the world for his transparency and his dedication to furthering the company's future. And alongside a board of directors filled with talented individuals from big names like Disney and Google, Square and its 3,000 employees are poised to continue accomplishing big things down the line.
As an organization, Square has proven that it prioritizes sustainability first, and that they fulfill all the requirements of John Elkington's so-called triple bottom line. Cryptocurrency mining can be very costly in terms of energy and the environment, so Square has invested money and partnered with companies in search of net zero carbon emissions by 2030. Socially, they've also donated $850 million to over 80,000 small businesses, among other community donations in 2020. Jack Dorsey also enforces certain corporate rules, including that any meeting over 2 people must be transcribed and distributed via email to ensure internal transparency. Thus, environmentally, socially, and professionally, Square is a strong ally of the underrepresented and overlooked.
So recently, I had the opportunity to visit the Square campus in San Francisco, shown in the bottom right. But unfortunately, due to COVID-19, I was unable to take a full tour and to meet with the head of investor relations as I planned to. However, we did compile a number of quotes available online from executives that address my most pressing questions. So I was mostly curious to know how Square prioritizes its large corporate clients versus the small businesses that it so publicly promises to serve, which CEO Jack Dorsey has previously responded to by affirming that first and foremost, they care about the small businesses that they know rely on them.
We were also curious about Square's plans regarding expansive growth, which their CFO has said is reliant on their upcoming investment opportunities. Thank you for your time, and we hope you don't look back and regret not buying the next big thing. Thank you.
Thank you.